Welcome to this video about how tech startups are racing against time to meet payroll after the failure of Silicon Valley Bank. With new regulations, rising demand for high-tech services, and uncertain financing options, there's been a significant shift in how business is conducted, leaving many small businesses struggling to keep their heads above water. In this video, we'll explore critical issues facing these companies as they navigate turbulent waters while shedding light on possible solutions worth considering. Tune in now and learn more. Tech startups and other businesses raced to line up sources of cash for payroll and other immediate needs after their deposits in Silicon Valley Bank SIVB -60.41% decrease. The red down-pointing triangle, long a linchpin of tech financing, were locked up when federal authorities took control Friday morning. The bank's sudden collapse fueled uncertainty among many founders over the immediate future of their businesses, and further hobbled a startup sector that has struggled with a sharp slowdown in venture funding and broader economic woes. Its demise will likely further accelerate the shift away from the high-risk and aggressive growth strategies that startups embraced during the decades-plus bull market that ended last year, according to longtime startup investors. If SVB, which for 40 years has been a pillar of the startup ecosystem, can disappear in 36 hours, what else is going to drop? Said Rick Heitzmann, the founder of VC firm FirstMark Capital. That's where we start to get to the bottom. You start to get to a place where people are much soberer about how they think about risk. Gary Tan, president and chief executive of Y Combinator, a startup accelerator in Silicon Valley, said many of its roughly 3,000 active companies had a relationship with Silicon Valley Bank. YC surveyed those companies Friday morning, and by Friday afternoon, nearly 400 had said they had exposure and over 100 said they worried they couldn't make payroll over the next 30 days without a quick resolution for the bank. The whole startup community is on edge right now, said Mr. Tan, who added that the companies most affected by this aren't major tech companies, but smaller startups that were founded in the past few years. The federal seizure of Silicon Valley Bank came after startups started pulling their money out of the bank on Thursday to avoid potential losses on deposits over the amount insured by the federal government. Those withdrawals, encouraged by some venture investors, sparked a classic bank run, dooming the tech lenders' plans to raise fresh capital and stave off collapse. The Federal Deposit Insurance Corp. said Friday it was appointed as receiver, marking the second-largest bank failure in U.S. history after the collapse of Washington Mutual, Inc. During the height of the financial crisis, the FDIC said depositors with funds exceeding the insurance cap of $250,000 would get receivership certificates for their uninsured balances, meaning that those with large deposits stuck at the bank may not get their money out soon. Ben Kaufman, CEO of RetailerCamp.com, sent out an email to customers offering 40% off and encouraging them to shop so that the company could keep up its operations. Unfortunately, we had most of our company's cash assets at a bank which just collapsed, Mr. Kaufman wrote in an email that was viewed by the Wall Street Journal. We are hopeful that this will be resolved soon, but in the meantime we are turning to you, our most valuable customers, to help us. According to regulatory filings, some established tech companies also had business with the bank. Streaming platform Roku Inc. said it had about $487 million of its $1.9 billion in cash and cash equivalents at SVB as of March 10. Those deposits are uninsured, Roku said in a filing, adding it doesn't know how much of those deposits it will be able to recover. Video game company Roblox Corp. said about 5% of its $3 billion of cash and securities balance as of Feb. 28 was with SVB. The gaming company said in a filing, regardless of the outcome and the timing, this situation will have no impact on the day-to-day operations of its business. Several other companies also reported some funds tied up in the SVB situation, though many of those characterized the amounts as relatively minor. Some in the tech community said they were holding out hope that the FDIC would find a buyer over the weekend who can help backstop the many tens of billions of uninsured deposits held at the bank, limiting losses. Meanwhile, some venture firms have considered issuing emergency funding to their startups to prevent them from running out of cash, investors say. New York health tech startup Biosha expects to access its insured SVB accounts on Monday, but in the meantime, it is also making backup plans for alternative funding, whether in the form of loans or venture capital support, said the company's co-founder and chief executive, Neve O'Hara. "We are just working every angle," Ms. O'Hara said. The company has about 20 full-time employees and expects to be able to make payroll, she said. Silicon Valley Bank occupies an unusually central place in the startup landscape after having spent years building itself out as a financial hub for many startups and venture capital firms. Across Silicon Valley on Friday, startup founders and their venture capital backers were trying to determine what to make of the news that the bank had so swiftly gone out of business. "The contagion is broad," said Mr. Heitzmann of FirstMark Capital, who said the bank's collapse could spur founders to diversify deposits and become more capital efficient. Silicon Valley was already under pressure. Tech companies have laid off tens of thousands of workers, many of them in the region, and startups have struggled to raise more funds over the past year. Some already were looking at dwindling cash piles. Rippling, a payroll processing startup that services other startups, was unable to complete some payroll runs on Friday, according to tweets by its co-founder and chief executive, Parker Conrad. "The latest we heard from SVB this morning was that this was an operational delay and funds will be released. However, FDIC involvement makes us skeptical of the assurances we are getting from SVB," he tweeted. A spokesman for Rippling, whose corporate parent is People Center Inc., didn't immediately respond to a request for comment. The company is a key payroll provider to startups and says it has processed $10 billion in employee salaries. In a tweet later Friday, Mr. Conrad said the company made changes it hoped would see affected employees paid by Monday at the latest. Alex Meshkin, CEO of medical service provider Flow Health and a Rippling customer, currently can't pay at least 1,000 of his employees. Mr. Meshkin, who is based in Los Angeles, broke the news to his staff over Slack and is trying his best to field questions from his employees, some of whom he says may be living paycheck to paycheck. If his employees aren't paid on Monday, the founder says he will file a notice of material breach of contract. The company may have to move to do payroll manually until they sort out a solution. SVB's collapse marks a sharp turnaround from even Thursday, when some venture capital firms believed the bank was in good shape and shied away from telling their startups to pull cash. In a note sent to founders on Thursday evening, Khosla Ventures said that while the bank's sudden difficulties came as a surprise, it still believed SVB was fundamentally sound and would be able to survive the current crisis. The firm encouraged startups to always have at least 3 months of available cash at multiple financial institutions. A spokeswoman for Khosla Ventures said the firm believes that most of the deposits and securities stored at Silicon Valley Bank would be safe for most of its companies, despite its collapse. Brad Hargreaves, who has founded 3 companies,